The winter of 2025 feels paradoxical for crypto investors. If you look only at the headlines, this is undoubtedly the greatest bull market in history. Bitcoin is smashing records with unstoppable momentum. ETF money from firms like BlackRock is pouring in, and the US president's pardon of CZ has even become a global political talking point. But that is only one side of the story. When you close the news, open your trading account, or check those once lively crypto chat groups, you will find an eerie silence. No alpha hunting. No sudden wealth story. Just accounts slowly shrinking, and people ask the same question. If this is a bull market, why am I losing money? This is not a delusion. It is an invisible crash happening right under our noses. Bitcoin is rallying, while most other sectors are sinking. To understand what's really going on, a research team published a long report at the end of 2025. They ran a simple experiment using index-based tracking. The idea was straightforward. Imagine that in January 2024, you invested $10 into every major crypto sector, Layer 2s, DeFi, Memecoins, infrastructure projects, and then did nothing. No trading, no rotation, just held until late 2025. And guess what happened after 2 years? The outcome is brutal. The $10 allocated to infrastructure is now worth just $1.20, a 90% loss. For 2 years straight, these assets faced constant selling pressure and disappearing liquidity. What used to be marketed as long-term value slowly turned into valuation compression and deep discounts. And what about meme coins? They appear less tragic, but the reality is even harsher. Do not mistake this sector for a safe haven. It is simply a different risk structure. After a massive rally in 2024 and a deep correction in 2025, the index is back to principal, but only after investors endured an 80% drawdown to return to square one. Politics, celebrity tokens, faster cycles. What once felt like rebellion has turned into a highly efficient extraction machine. Shorter games, bigger losses. And this is the flip side of the 2025 bull run. The crypto market didn't rise together. It split. In past cycles, capital flowed like a waterfall. Bitcoin went up, profits rotated into Ethereum, then spilled into altcoins. Liquidity moved naturally from the top to the edges. That mechanism is gone. This time, the flow was cut. On one side, we saw a beta feast led by Wall Street. Institutional capital allocating strictly to a few compliant assets. On the other, a liquidity desert where most long-tail projects are left fighting over scraps. Predatory trading has become the norm. Narratives no longer bring buyers. Stories no longer guarantee price action. So who cut off the flow? Why have the VC coins that once promised 100x returns become graveyards for retail investors? Why are fair launch meme coins actually the most dangerous casinos? And what role do the three standing giants of the industry, Binance, Tether, and Tron, play in this dynamic? In this series, I'll break down this research report across 6 episodes. We'll revisit the period from 2024 through the end of 2025, using indices to explain this structural split layer by layer, and we'll dissect the brutal logic behind this massive transfer of wealth. Who stole your bull market? The reality is harsher than you expect.